Ever pondered how some people manage to get wealthier during a recession while others struggle to make ends meet? It's a question that sparks curiosity, isn't it? Welcome to the paradox of recession, a phenomenon that, while seeming counterintuitive, holds the key to understanding how fortunes are made during economic downturns. Let's set the stage. A recession is a significant decline in economic activity that lasts for more than a few months. It's visible in real GDP, real income, employment, industrial production, and wholesale retail sales. When the economy takes a downturn, businesses start to falter, jobs become scarce, and overall, it's a time of financial stress for many. But here's the paradox. While a majority might be grappling with financial instability, there are those who not only survive, but thrive and accumulate wealth during these challenging times. How so, you may ask? Well, that's where the importance of understanding economics, investment strategies, and opportunity spotting comes into play. Economics, at its core, is about making choices under conditions of scarcity. When a recession hits, resources become even scarcer, and making the right choices becomes crucial. This is where a solid grasp of economics can be a game changer. Investment strategies, too, play a vital role. Those who understand the market dynamics know that recessions can present unique investment opportunities. Stocks and other assets often become undervalued during a recession, providing a chance for savvy investors to buy low and sell high once the economy recovers. Opportunity spotting is the final piece of this puzzle. It's about seeing potential where others see problems. It might be a business that's undervalued, a market that's overlooked, or a trend that's about to take off. Those who can spot these opportunities and act on them swiftly often come out ahead. So, you see, the paradox of recession isn't really a paradox at all. It's simply a matter of perspective, knowledge, and action. In times of economic downturn, the well-prepared and knowledgeable see opportunities where others see only disaster. So, how does one accumulate wealth during a recession? It's not magic, it's strategy. We're talking about the basic principles of wealth accumulation here: saving, investing, and diversifying. These three pillars form the foundation of any successful wealth accumulation strategy, and they're especially crucial during a recession. Let's start with saving. It's not just about putting a portion of your paycheck into a bank account and forgetting about it. Nope. Saving is about discipline. It's about making conscious decisions every day to forego immediate pleasures for a long-term financial security. It's about understanding that every dollar saved today is a dollar plus interest tomorrow. Next, we have investing. Now, investing is not about getting rich overnight, it's a long game. It's about understanding market trends, doing your research, and making informed decisions. And yes, it involves risks, but remember, no risk, no reward. Investing is about growing your money, making it work for you, and not the other way around. Finally, there's diversifying. Think of it as not putting all your eggs in one basket. Diversifying your portfolio means investing in different types of assets like stocks, bonds, and real estate. This way, if one sector takes a hit, your entire portfolio doesn't go down with it. But why is diversifying important during a recession? Well, in a recession, certain sectors may be hit harder than others. If you've diversified your investments, you have a safety net. Your investments in other sectors can keep you afloat, even if one sector is struggling. Now, these principles may sound simple, but don't underestimate their power. They're the building blocks of wealth accumulation, and they've stood the test of time. They work in booming economies, and yes, they work during recessions too. Don't let a recession scare you. Instead, see it as an opportunity to save, to invest wisely, and to diversify your portfolio. An opportunity to grow your wealth. Remember, the first step to wealth accumulation is understanding these principles and putting them to work for you. Let's dive deeper into the first principle of wealth accumulation: saving. In times of economic downturn, the significance of saving escalates. It's like building a financial fortress, a bulwark against the uncertainty of the recession. Having an emergency fund, a stash of money set aside, can be a lifesaver when the unexpected happens. It's your safety net, your parachute in free fall. But saving isn't just about emergency funds, it's also about long-term savings. Money set aside today can be a cushion for tomorrow, a buffer against the hard times and a springboard into the better ones. And here's the magic of saving: it opens doors to investment opportunities. Every dollar saved is a dollar you can invest, a seed you can sow in the fertile ground of the market. And in a recession, the market is often ripe with opportunities for those who have the means to seize them. In a recession, a penny saved could very well be a penny earned. Now that we've covered saving, let's talk about its counterpart: investing. Investing is the catalyst that can transform your savings into wealth. especially during a recession. Sounds paradoxical, doesn't it? Well, it's not. Let's unravel this mystery together. When the economy hits a downturn, it's easy to let fear guide your financial decisions. But consider this: a recession can be a golden opportunity for savvy investors. The reason for this is straightforward: the principle of buying low and selling high. During a recession, asset prices often fall. Stocks, real estate, commodities, you name it. They're like items on a discount rack, waiting for smart shoppers to scoop them up. And who are these smart shoppers? They're investors who recognize the value beneath the surface. Investors who understand that a recession is temporary, but the intrinsic value of good assets is enduring. Imagine you're at an auction where everyone else is under the impression that the items are worthless. You, however, know that these items are priceless antiques. You'd probably buy as much as you could, right? That's the same logic we apply to investing during a recession. The goal is to buy these assets when their prices are low, hold on to them as the economy recovers, and then sell them when their prices rebound. This is the essence of buying low and selling high. But here's a critical caveat: not all investments made during a recession will guarantee profits. You must do your homework, analyze the market, understand the risks, consult with financial advisors. Investing is not about making quick money, it's about making wise decisions that will pay off in the long run. So, while a recession may seem like a financial storm, for the astute investor, it can be a rain of opportunities. It's during these challenging times that fortunes can be made by those who are patient, diligent, and informed. In the world of investing, a recession can often be a buyer's market. So, don't let the fear of a downturn scare you away from potential profits. Instead, see it as a chance to buy valuable assets at discounted prices, and watch your wealth grow over time. The final principle of wealth accumulation we'll discuss today is diversification. Picture this: you're holding a basket full of eggs. Now, what would happen if you trip? You'd lose everything. The same principle applies to your wealth, especially during a recession. If you put all your financial resources into one venture and it fails, you're left with nothing. This is where diversification comes into play. It's about spreading your investments across a variety of assets. Think stocks, bonds, real estate, even starting your own business. By doing so, you're not just protecting yourself against risks, you're also opening up multiple avenues for potential growth. Diversification is like having multiple keys to different doors. If one door closes, you've got others to open. It's about creating a balanced portfolio that can withstand economic downturns and capitalize on opportunities. Remember, diversification isn't just a safety net. It's a trampoline to greater heights. Let's take a moment to recap what we've learned today. We started with what seems like a paradox: wealth accumulation during a recession. It sounds counterintuitive, but it's a reality for those who can see the opportunities amidst the challenges. Remember, recessions don't spell disaster for everyone. They create a dynamic economic environment where the astute and strategic can thrive. We then discussed the basics of wealth accumulation. It's not about getting rich overnight, but about steady, consistent growth. It's about understanding the power of compound interest and how even small savings can snowball into substantial wealth over time. Saving is not just about stashing away money, but about creating a safety net that allows you to take calculated risks. Next, we ventured into the realm of investing wisely. We learned the importance of understanding the market trends, doing our homework, and not letting fear or greed drive our decisions. Smart investing is about patience, research, and making informed choices. It's about seeing the potential in companies and sectors that others might overlook during a recession, and capitalizing on their growth when the economy rebounds. Then, we delved into the concept of diversification. Spreading your investments across different assets and industries is like creating a financial safety net. It helps to mitigate risks and take advantage of various growth opportunities. Remember, don't put all your eggs in one basket. Diversify, diversify, diversify. Lastly, we talked about the importance of seizing opportunities during economic downturns. A recession may seem daunting, but it also brings unique opportunities for those with the vision and courage to seize them. It's a time to buy low, sell high, and think outside the box. With these strategies in your arsenal, a recession could become not a crisis but an opportunity for growth. The road to wealth accumulation during a recession is paved with knowledge, strategy, and action. So, are you ready to seize the day?